Elevated prices of fodder and wholesale milk continue to erode the dairy industry's profitability. For instance, the operating profit margins of Heritage Foods and Dodla Dairy dropped 482 and 230 basis points respectively in the September quarter on a yearly basis despite firm revenues. To mitigate the pressure on profits, the industry has steadily increased prices over the past 10 months. However, analysts believe the relief will only begin to trickle in from the March quarter.
Post-COVID, the dairy industry faced unprecedented inflationary pressure as the price of raw milk and packaging went up sharply due to increase in the prices of fodder with the farmers passed on, lumpy virus taking out 7 to 8% of milk supply, and increased demand due to a sharp rise in exports of butter and SMP. This put pressure on the dairy industry's gross margins in FY23, which declined from 25% plus to less than 18%. As mentioned earlier, the companies have taken price hike with some lag, and the benefits are expected to be seen in Q4 FY23, and FY24 is expected to be a normal year in terms of margins and raw milk supply.
Experts say the dairy sector will have to continue raising prices until the second half of FY23 as animal fodder prices remain high. According to ICICI Securities, dairy companies' EBITDA margins may contract by 50 to 100 basis points in the second half of FY23. Dairy companies need to raise prices again during the remaining 2 quarters and focus on increasing the share of value-added products to protect their profitability. That said, the industry has managed to fare better in terms of top-line performance even amid crunching profitability. Analysts say the sector's revenue may remain strong due to better volumes and higher sales to hotels, restaurants, and catering segments. Against this backdrop, they recommend investors pick companies with strong distribution networks and a higher share of value-added products such as ice cream, cheese, and lassi, among others.
In the dairy sectors, companies with a large product lines, wide distribution networks, and stronger balance sheets should be preferred. Such companies manage to sustain their revenue performance and protect their margins during turbulent times. Our top picks in the dairy segment are Parag Milk Foods and Heritage Foods. Parag Milk is quoting at 8.7x FY25 EV by EBITDA, while Heritage at 9.9 times FY25 EV by EBITDA appear attractive to us.
Meanwhile, on the bourses, shares of Parag Milk, Dodla Dairy, Heritage Foods and Vadila Industries have jumped 6 to 92% so far in FY23 as against a 4% gain in Sensex. Global peers will sway the mood on Dalal Street today. Investors will also track Q3 GDP data from the US and the UK later in the day.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.